Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, December 4th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. You can see the trend gauge over here. We've got the green arrow on market leaders, plenty of leadership acting fine. Then taking a turn and looking at the 5 major indexes, all 5 above their short-term 21-day exponential moving average and their medium-term 50-day moving average. We've also got all 5 above the 200-day moving average. Small caps with 2 closes above. We need to give it a little more time, make sure that we can close the week above before we go to a green arrow there on the long-term time frame. So what happened today? If we're looking for follow through from Friday's breakout on a Jerome Powell speech, you got it, but not in the way you may have wanted it, or I'm mixing my metaphors here. But what I'm trying to say is that once again, we've got follow through strength from small, mid cap, and leading stocks, and laggards in the Big-7. So small and mid lead, but the Big-7 bleed again. So even though we had a break to the upside in the in the S&P 500 above a key area on Friday after that speech, that breakout was given up and we're back into that base. But we did break further to the upside in the small cap and mid cap indexes. We'll take a look at it when we go through the charts. But the bottom line on the day, here are the numbers. The Big-7, ugly. Every one of the Big-7 down at least 0.95% or more, on average down 1.63%. RG8, this is the good news. This is why we created this index, to give us a feel for how mid and small cap growth stocks are broadly acting, because they don't always move in sync with the market, sometimes to the plus side, sometimes to the downside, recently to the plus side, but very much lagging the big cap indexes for, well, really, they topped in early 2021 and didn't show any relative strength since then. As we've been documenting on these nightly videos, took a while for mid and small to get above the 200-day moving averages. Finally did last week, and now we're making sure we can hold it, but the rotation continues to be into those type of names. So our 8 growth ETF composite up 0.3% on the day. S&P 500 down 0.5%. Equal weighted S&P 500 just barely positive, again pointing to the disappointment from the Big-7. NASDAQ 100 down 0.93, equal weighted also down. Tech kind of took a break. Semiconductors, some software names, a few software names were up today, but semiconductors and broad tech down 0.6% on the equal weighted index. Dow just barely down 0.11%. Here's the good stuff. Mid caps up 0.8%. Russell 2000 open down 0.3%, not as bad as the big cap index is open down, but it reversed quickly, showed strength, and finished up over 1% on the day. Global 60/40 down 0.45%, both global stocks and global bonds taking a break. In-house GROTECTION down 0.41%. Let's get to some charts in the tail of the tape, and we'll start with the S&P 500. You can see the breakout here on the daily chart on Friday. Undercut and reclaim of the 8 EMA today. We've been kind of looking for a touch of this. We undercut and reclaimed it on Thursday. Also, again, today, that makes last week's lows on Thursday pretty critical. Let's go to the 30-minute chart here. We'll draw the lines like we've pretty much been drawing them. 11:14, this was the CPI, gap up, follow through, breakout above this 40. 520 area on the 20th. Then we went into a 1, 2, 3, 4, 5-day base, attempted to break above this key area. This 45.70 level continues to play an active role. I didn't draw that line very well. Let's draw that one again. It's really up higher. 45.70ish, and you can see that's basically where we closed today. So we poked our head above it on Thursday, failed, ran into it at the end of day Friday, back below it, or sorry, on Thursday, back below it on Friday before breaking out on that Jerome Powell speech, flagging into the close, couldn't get above 4,600 and didn't even approach 4,600 today. Spent most of the time below this 45.70 level, closed right there. Gap down kind of significant at the open, 0.75% on the S&P, 1% on the NASDAQ 100. And let's look at that NASDAQ 100. You can see how much worse this looks relative to the S&P 500, as failed now with that breakout above on 1120, above this CPI move higher. Failed breakout here, gap down here, bounced at this 383-ish level, 382.66 today's low. The positive is we closed at the top of the range and didn't break down. But again, this makes the lows critical. Also would not, today's lows critical, also would not be surprised if we fill this gap here down to 379. You can see this on a daily chart. It would be this level right here. But where did we bounce today? Right where we needed to at the 21-day moving average. Again, today's lows somewhat critical. These stocks really surprising to me, certainly, after seeing the breakout on Wednesday, the breakout attempt on the NASDAQ 100, but the selling continuing on them for 4 days, and relative weakness going on 2 weeks now on the NASDAQ 100 names. Let's go to the Dow Jones Industrial Average. Big leadership, big relative strength over the last 2 weeks. Pulled back, bounced at 36,000 today, just barely down for the week. Now, for what such a long time was the relatively weak indexes, and now shifting gears and taking a leading role. Above 480 now on the mid cap index, that's the MDY, and IWM extending the gains above the 200-day moving average. We added to our TNA position today, up 1.07% on the day. Remember, we had a failed breakout at this level around 189 back in July. That's when the market topped. Really tough move down from 200-ish to 160. That's just a little less than a 20% pullback, but a couple of false starts here off the bottom, but certainly getting it together over the last 2 sessions, as this clearly has been the index that's been leading. Let's go to the VIX. VIX up a bit today, but did close at the lows of the day, similar to the way the S&P closed at the high of the day, up 3.6% on the day. How about the dollar? Dollar strong all day, up 0.45%, ran into the declining 21-day moving average and reversed, though. Leadership in gold, silver, and gold and silver stocks took a big hit today. They've been very strong. Now, let's just go back to where they were back here, showing extreme strength, which evaporated with a failed breakout, another leg up. Don't panic on one bad move down here, but we will be watching the 21-day moving average. Should we get back down to that level, we will at some point, sometimes maybe sooner rather than later. Volume was heavy today too. Not something we like to see, but for now, this is a false breakout above the recent highs on gold. You can see we poked above 190, poked above it back here in April and again in May and again on Friday, but back below it today and closed below the 8 EMA. Gold stocks, similar failed breakout above this level. Now, they're not challenging the all-time highs the way gold is. They do show relative strength when gold is running, so they do have a lot of catch-up to play as far as getting up to this 36 level. That'd be another 20% or so move, but failed breakout for now, closed mid-range, still holding the 8 EMA. Not too bad. So after the pretty strong move up over the last week and a half. Silver down 3.73%, didn't get up to the top of its range either, and did close below the 8 EMA. Bitcoin, here's the big news, broke out above 40,000 and broke out above the 20 level here now too after all this battling back and forth for 3 weeks. A clear breakaway gap. We'll be monitoring the lows of today's range. We certainly want to hold that on any pullback. Let's flip the bonds now. The prices were weak across the board, which means the yields ticked up a bit. You can see the BND broad ran into the declining 200-day moving average on Friday. Inside day, but down 0.4%. TLT is the long bond, another inside day, also down 0.40%. TYX, this is the 30-year yield inside day. A little bit of a bounce off of the recent lows. Same thing with the 10-year. The TNX up 1.47%, still an inside day as yields continue to come off. Right now, just a counter trend rally, which it has been contained for the most part by the 8-day exponential moving average, and that's pretty steep. So wouldn't be surprised if we see a bounce up here into the 21-day moving average. That's our inter-asset correlation. Let's go to the tail of the tape. You can pause this. We'll hit the highlights. As I mentioned, Bitcoin topping 40K. Let's go right to the sectors. Bitcoin with the leadership today. Uranium. There's some big consortium going on that committed to spending more money and committing to nuclear power. That's why uranium popped today. ITB builders, even though rates were up, this was positive today. And KRE also taking a leadership role to the downside. Gold, and silver stocks, semiconductors, big cap software, IGV, XLC, and XLK on the weak side, as well as oils, despite OPEC agreeing to more production cuts. Pulling some weeds and planting a couple new flowers in the portfolio today. We added to our existing positions in Snow and TNA, two new ones. These were gaps up from Friday. Extreme volume, extreme strength. They pulled back and money came into them. It's what you want to see. Staying strong. Trim some UPRO on that move below that breakout level from Friday, and we got rid of the laggards. Palantir, a terrible day, down 9% ish, and NVO and Lilly just continue to show relative weakness. We punted on those also. So mild reduction in our overall exposure to the market. Bottom line, more of the same. Mid and small cap lead, Big-7 bleed. It rhymes. I'm a sucker for a rhyme or alliteration or acronyms. Sometimes to the extreme, but I digress. All right, let's take a look at a couple of charts, mainly the portfolio. What'd we sell? Palantir, just plain didn't work. Gapped out on earnings, broke out of the base, gapped up on earnings, then broke out of the base. Ugly reversal on a bad analyst report. A little bit of bounce back, bounced off the 21, but below the 21 with heavy volume today. We took our loss on this. I believe it was a small loss. We bought at 20, we sold at 19 and change, less than 10%, but it was a 0.7% loss on a 2% size. We take these starter positions on these strong things and we add to them if they work. If they don't work, we get out with a paper cut. This one didn't work. Two that we're hoping continue to work. We've seen this model. A lot of people get scared by these big gaps up, but Elastic initially had another gap up today, then started selling off as the market was coming in, but actually closed positive on the day. So we took a starter position in this, also in Path, which gapped down, but buyers came in all day and it closed at the top of the range, inside day and up on the day. After hours, we've got another potential big move for tomorrow in GTLB. This is coming out of a nice base. It's up 16% after hours. That's one we'll be taking a look at tomorrow. And the other two that have been the strongest as of late, IoT, pulled back to the pivot today, didn't take a position in this, and Affirm, just showing that, yeah, these things really can power higher if the market wants to buy them up. This is just monster volume, nowhere near an entry point on this one, but it is something that we're closely monitoring for any kind of weakness, maybe off the 8 EMA. if we get there to take a starter and then see where it goes. What else did we do in the portfolio? Snow. Earnings gap up, not out of the base, so it's still close to a very reasonable buy position. Bounced Friday toward this 180 when it was weak, was down early today. Some strength came in the afternoon. We added to this. We added to TNA. I already showed the IWM chart, and with the break below that breakout level, we trimmed a little bit of UPRO. Those are the portfolio changes on the day. So what else stood out today? Coin continues to be very strong. No surprise with the Bitcoin break higher above 47. Let's see, anything else stand out in the portfolio? Let's take a look at BRBR. There have been a couple of just new merchandise stocks that broke out on earnings after having nice runs out of a prior base and just continue to go higher. BRBR is one of them. Another one is Deckers, continuing to make higher highs after its earnings gap higher. And GoDaddy really is living up to its name, GoDaddy, higher highs after a big earnings volume move up. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. If you want to comment on YouTube, we appreciate it. Like, subscribe, and tell your friends about us there. If you're interested in becoming a client, my partner's Dan Stewart. That's dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We're trimming, pulling the weeds, planting flowers, watering what's working, selling some into strength, but the market rotating into small and mid growth, and those are acting very well, and money coming out of the Big-7 names, which led for so long. Not a surprise this happens from time to time. I pointed out this breakout back in March where we then had relative weakness on the NASDAQ 100. It went sideways, not really going sideways, more down in this case, but today's lows may be critical as it bounced right on that 21 level. We don't want to see that break. And with that, I'll wrap it up for Monday, December 4th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.